Hello, you are welcome again to another case study we are going to look at. This one happened just last week here. Okay, so this will be case study number 4. We are looking at Forex. USDCHF. As usual, we'll start from the monthly time frame. Okay, monthly time frame, then we'll go from the monthly to the weekly, then we'll look for our entry on the daily time frame. All right, now let's go to the monthly time frame. On the monthly time frame here, we can see that what price has been doing. Price has been giving us, selling signal as per monthly previous high, monthly low, internal monthly high, internal monthly low, and so on and so forth. Then when we zoom in into the chart, looking at where the market is currently at, we can see that over here we have the first candlestick taken out by second candlestick, and the third candlestick went below the low of the second candlestick, and then we have this low point taken out. So this is our monthly previous high. I'll mark it there, month high, and at this point number 3 candlestick took out the leg of number 2 and number 1 candlestick. So therefore we take it like this, that this is our month liquidity sweep kind of leg. Then this point will then be our month low. All right, month low. When we have gotten these parameters together, what do we do here? Over here we are looking for a situation whereby we'll look for our reversal candlestick pattern on the weekly time frame. And remember, we don't enter trade on the weekly usually, especially when we are trading Forex and other Forex and others, except when we are trading stocks. Okay, so we'll be looking for our entry on the weekly. So over here on the weekly, let me replay the chart. So over here on the weekly, what we saw is that price has already taken out this monthly low, and usually we don't take monthly entry, so therefore we'll now go and look for what will happen on the daily. Okay, you see, this is on the daily time frame. On the daily time frame, you see what has happened over here. Price has given us our kind of reversal candlestick pattern. This is candlestick 1 taken out by candlestick 2, and then candlestick 3 took out the high of candlestick 2, just like that. Everything is all about repetition. So therefore we will have this particular day demand zone, okay, as our entry to buy this market. And when we buy, our target is usually 1 to 3. All right, we target 1 to 3. That's our target. I usually put it at 1 to 3.03. That's how I take my trade. So in this trade, I've used this as an example before, but I want to show something here. So in this trade, what we're looking for is for the market to come down into this chart, into this demand zone, and then go up and give us 1 to 3, or at the same time I can also go up and take out this previous month high. All right, so let's see what the chart will do for us. Now over here, here's what the chart has done. Let's see if we have 1 to 3. Okay, we can now see that we have 1 to 3 already. So while this was going on, we can see that on this is just on the daily time frame. We can also go to the weekly to see if we can continue this trade. Now let's see what happened on the weekly. Looking at the weekly chart, we can see that this point here was the previous high, previous low, and if the price can take out this previous high point, we can look for a reversal signal to come and take out this low point. I hope you understand what I'm saying. This is what I'm talking about. let's see, this is the high point. Although from the monthly we should be buying, or can make a short sell also, because the market is not guaranteed that after it tap into the daily demand zone that's going to take out this month previous month high, it can just get to any of this range here and continue to come down. Okay, but our main target of 1 to 3 has already been achieved from this trade that tap into this demand zone here and went up to this point. Our 1 to 3 has already been confirmed. In some scenario, the market can go and take out that monthly high. If it doesn't, no problem. So we are still on the weekly. So on this weekly chart, let's see, this is just some playback. I've seen that price went to this month high point. That was what happened last week. Now let's go to the daily and see. Now on the daily time frame, let's play it. This is on the daily. This is on the daily time frame. Okay, I will expect price to come and take out this previous high point, and then this will be the weekly low. The week low now has now been confirmed. That here is the previous week low. All right, week low. Sorry, that's month week low. Now that we have our week low, now let's go to the weekly high and see what happened there. You see, the weekly high now has been taken out by this particular weak candlestick. So therefore, this high point is no longer weak high, it's weak liquidity sweep. And as such, we are going to be looking for a reversal candlestick pattern. Now that we have this, let's see what will happen next. Now, very good. So we have this type of formation. It is confirmed that this is candlestick 1 taken out by candlestick 2, candlestick 3 close below the low of candlestick 2, and then that of candlestick 3, meaning that, it closes below the low of candlestick 2 and that of candlestick 1. So candlestick 1, 2, and 3. 2 took out candlestick 1 high, 3 took out candlestick 2 low, and candlestick 1 low. So with this is our confirmed day supply zone. So therefore, we'll be selling this market. And you know, it's not to be in a hurry. This is a daily candlestick. This is a day candlestick. So we'll set our trade there to take just 1 to 3. All right. Usually, we can also take it from this point to. We can also take it from that price. We come to this our supply zone and come and take out this month low. Okay, that is usually how it should be, but I'm saying in most cases we can stick to our 1 to 3 and we'll be having our trade without any stress. So let's see what will play out. You can see on this trade we have our 1 to 3 beautifully. So this should have been, with just by following this strategy, would have gotten our 1. We should risking 1 to get 3 risk to reward by just following this our principle. And while I was trying to put out this lesson together, trying to explain and make YouTube videos, I missed out on this trade because I was just only on the daily time frame. I didn't put a lot of concentration into it. All right, so this is how the market is. It's just a repetition, you know, coming from the monthly, then we went to the weekly, then we went to the daily. So that is just how the market is. So what are we expecting here is when this candlestick, when the formation now get to this point, if I have a reversal candlestick formation, I can also buy this trade, either targeting 1 to 3, or I will be targeting this previous month high. But if it does not show any sign of reversal by the time you get to this previous week low, then that means the price will be coming down to take out this previous month low. I hope this is you can understand it. Just practice, and you are going to make a lot of profit. Thank you.